Today we'll be testing two custom indicators previously featured in one of our videos: opening range breakout and volume-based buy and sell momentum. We'll use Forex Tester Online for these tests. Both indicators have been converted from TradingView PineScript to JavaScript for this platform. We'll run 100 trades to test how the ORB indicator performs alone, then another 100 with added volume-based buy and sell momentum. Then we'll analyze the performance data and walk through some extra analytics features in detail. The goal is to show you how the ORB indicator performs in isolation versus with volume confirmation, and how to properly evaluate backtesting results, understanding what the metrics actually mean for live trading. We'll also examine behavioral analysis features that can help identify psychological trading patterns. This video is sponsored by Forex Tester Online, and we have a discount code for you in the description. Please use our link if you want to support the channel.
I'll have to ask my accountant about that.
We need to create two separate projects. Simply click New Project. Or if you need a more detailed tutorial on how to use the platform, we've linked that video in the description. We'll be using EUR/USD on the 15-minute time frame for both tests, with a starting balance of $10,000, leverage set to 100-to-1, and commission set to $7 per round trip. I know this might be different depending on the type of account you have with your broker, but we think this will be good for comparing both strategies. Let's start by establishing our baseline with the pure ORB breakout strategy. The ORB strategy rules for our first test: identify opening range high and low, first 15 minutes of London session. Enter long on breakout and candle close above the range. Enter short on breakdown and candle close below the range. Stop loss, opposite side of opening range. Take profit, 2-to-1 risk-reward ratio. Exit any open position at daily close, regardless of profit loss. So let's begin our testing. I really like the speed function. It makes the whole process so much easier, whether using the slider alone or combined with keyboard shortcuts. And here are the results after 100 trades. Now we're testing the same ORB strategy enhanced with volume confirmation and improved position sizing. Based on our first test, we noticed many trades were getting stopped out prematurely, so we reduced our position size to allow for wider stop losses while maintaining the same risk-reward ratio. We only enter positions when volume confirms our direction, focusing on higher probability setups that avoid early stop-outs. Let's see how this performs. Here are the results after 100 trades with the combined approach. The enhanced strategy created an impressive plus $1,149.51 performance improvement, turning a solid 15.46% gain into an exceptional 26.95% return. Most importantly, it actually reduced maximum drawdown while significantly boosting profitability. Key lessons: signal quality versus quantity. The enhanced filters systematically improve trade selection by being much more selective, exactly what we wanted too. Psychological impact: a 42% win rate means winning 4 out of 10 trades, with manageable losing streaks that most traders can handle. Risk management: the restoration factor improved to 2.88, meaning the enhanced strategy excels at recovering from losses. The clear winner here is the enhanced ORB approach, showing that thoughtful refinements can dramatically improve performance. By adding better filters and stronger risk management, we not only improved returns, but also created a superior trading experience across almost every meaningful metric. In our testing, this refined strategy performed exceptionally well on the specific instrument, time frame, and period used, suggesting it's particularly effective in similar market conditions when ORB principles are applied with precision. That said, this is not financial advice. Your results may vary significantly. Always forward test before risking real money. For future use of this strategy, it may be worth experimenting with a slightly higher profit target, as many missed winning trades could have increased overall profits. However, this would need thorough testing to determine if the added risk is justified compared to the tested 1-to-2 risk-reward ratio. Another option worth exploring is applying a trailing stop after reaching the 1-to-2 target. The key is to maintain disciplined risk management to keep drawdowns in check while taking advantage of the improved profit factor, which shows that this approach can deliver stronger results and substantially boost overall profitability. Now let's dive deep into the analytics features using data from our previous UT Bot testing on BTC USD. If you missed that video, I'll link it in the description. This will show you exactly how to analyze any strategy's performance using these tools. Starting with the trader persona section on the left, the platform identified the trading style as swing, with a median trade duration of 1 day, 15 hours, 36 minutes. The behavioral traits breakdown is fascinating. Positive traits, adaptable. The system detected that we adjusted our stop-loss placement based on market structure rather than using rigid fixed distances. To the algorithm, this looks like adapting to market conditions. Disciplined approach. We consistently followed our UT Bot signal rules and always set stop losses, which the system recognizes as discipline. Strategic thinker. The swing-based stop placement shows we're considering market structure, not just arbitrary levels. Negative traits. Lack of discipline. This likely comes from slight variations in our execution timing or position sizing calculations that weren't perfectly consistent. Greed-driven decisions. When our stop losses were further away, larger swings, our position sizes were smaller to maintain 1% risk, but we held for the full 2-to-1 target. The algorithm might interpret longer held trades with smaller positions as greed. Loss aversion, bias. This could be detected from trades where we held losing positions until our swing-based stops were hit, rather than exiting earlier. The key point is, the algorithm analyzes patterns in execution variations that we might not even notice. Even systematic traders have micro-inconsistencies that create behavioral signatures. This persona analysis is incredibly valuable because it quantifies these subtle execution patterns that most traders never recognize in themselves. Now you might be wondering, how can the algorithm detect behavioral patterns when we're following systematic rules? Here's what's happening. The platform analyzes subtle variations in execution that occur even with rule-based trading. While we followed consistent UT Bot entry and exit criteria, there are still micro-decisions in our execution, timing variations, slight differences in order placement, and adaptive elements like stop-loss positioning. The algorithm picks up on these patterns and creates a behavioral profile based on how we actually executed the strategy, not just the rules we intended to follow. Points to improve analysis. The platform identified 3 critical areas needing attention. Trade holding time issues. The system shows we're exiting profitable trades too early. With the UT Bot strategy, this manifested as closing winners at the first sign of pullback, rather than letting the trend develop. The recommendation is to use trailing stops or time-based exit rules instead of manual closes based on fear. Revenge trades. After losing trades, the data shows we took lower quality setups. The algorithm detected this by analyzing the time between trades and the setup quality scores. The recommendation: take a break after 2 consecutive losses. This isn't just psychology, it's data-driven advice based on actual performance patterns. Risk per trade. 69.9% of our trades risked more than our intended 1% rule. The system tracked this by comparing planned position sizes to actual execution. This reminds us to keep our position sizes as planned and not increase them even slightly. The solution: pre-calculate position sizes and stick to them religiously. Strengths analysis. Average trade versus trading costs. Since we didn't set trading fees in the UT Bot testing, this analysis shows our raw profit per trade without commission costs. This is still useful for understanding if the strategy generates enough profit per trade to remain viable when real-world costs are added. Timeframe analysis. The timeframe choice appears appropriate for our trading costs and strategy type. Trading without stops. All our trades had stop losses set. This shows good risk management discipline, even if our position sizing wasn't perfect. Consistent loss management. Our losses were consistent with our overall risk management plan, even when we occasionally exceeded the 1% rule. Appropriate stop-loss placement. Stop-loss placement in non-stop trades was consistent with our overall risk management system. Consistent position sizing. Despite the risk management issues noted earlier, our position sizing showed consistency in approach, just at higher risk levels than planned. Reward-to-risk ratio. Our reward-to-risk ratios were acceptable, meaning we weren't taking low-probability, high-risk trades. Position averaging. No position averaging detected. We weren't doubling down on losing trades, which is a common account killer. Daily loss limit. The platform tracked our performance after daily losses. While the raw data might suggest continuing to trade after losses, this needs to be viewed alongside the revenge trading patterns identified earlier. The key distinction is between systematic rule following after losses versus emotional revenge trades. Direction. Bias analysis. No direction bias detected, meaning we weren't forcing trades in one direction based on market opinion. We took both long and short signals equally when they appeared. This is crucial for trend-following strategies like UT Bot, return over maximum drawdown, ROMAD, 229.0%. This means we generated 229% return for every 1% of maximum drawdown. Anything above 200% is considered excellent. This metric is more important than raw profit because it accounts for risk. Maximum drawdown analysis. 15.03%. Maximum drawdown is within acceptable limits for the return profile we achieved. Most professional traders accept drawdowns up to 20% for high-performing strategies. Consecutive winners. The system shows our strategy of increasing risk after consecutive wins was actually justified by historical results. Counterintuitive, but the data supports it for this particular strategy. Trading session analysis. Our trading sessions were well aligned with the strategy requirements. We weren't trying to trade UT bot signals during low volatility periods when the signals are less reliable. Netting opportunities. No significant cost-saving opportunities through netting means we weren't overtrading correlated instruments. We stayed focused on our single BTC USD setup. Trading during news events. We were profitable when trading during economic news events. This is important because many traders avoid news, but for UT Bot, the increased volatility actually improved performance. This detailed analysis goes beyond basic profit-loss metrics. Every metric tells a story about not just strategy performance, but trader psychology and execution quality. The UT Bot results show a profitable strategy with some execution issues that can be fixed through better discipline. The strategy works, but our human implementation needs improvement. The platform doesn't just tell you if you made money, it tells you why you made or lost money and exactly what to fix. All three strategies have their own merits, each with distinct strengths and use cases. The platform's advanced analytics make it easy to evaluate them in depth, well beyond just basic profit metrics. You'll find all the links in the description, including our original TradingView strategy videos, an exclusive discount code for Forex Tester Online, and our affiliate link, which really helps support the channel. Feel free to share your backtesting results in the comments.